everybody. Welcome to Monday Morning Must-Knows. My name is Merlin Rothfeld, and let's talk about our upcoming trading week. Now, will this week be as exciting as last week? We had gold breaking out to all-time highs, huge moves up in the NASDAQ, the S&P, and Russell at the tail end of the week, made for some great trading. This week might be even better, but I can tell you one thing, it's probably not going to happen on the earnings front. Why? Because we just don't have a lot of earnings announcements to speak of. There's only 194 companies reporting this week. It's rather light, but there are a couple of names. Now, this one just keeps getting pushed down the road. This is that BYD Motors out of China. Who knows if they'll even report this week. I just wanted to keep it on there. We move forward to Wednesday, which gives you General Mills and KB Homes. And then on Thursday, you've got FedEx, Lennar, DR Horton, and FactSet Research. And that's it. That's all we got. Not a lot of huge names. Maybe you might like FedEx or General Mills, but hey, they're earnings announcements, so we got to keep an eye on those. Now we move forward to something that is of more concern, certainly from the overall economic perspective of the United States. We talk about it every month, and that's going to be the retail sales numbers. Now, this is important because, of course, we are a consumption-driven economy, and retail sales is a reflection of you and my propensity to go and spend our money. Well, you can see the previous reading was 1%. That was nice, especially when you look back over the last year. Last month's reading was one of the highest we've had in over a year. Well, what are we expecting for our upcoming meeting? Oh, don't hold your breath, folks. It doesn't look that great. 0.1% negative is where they're expecting it to be. So a contraction, which should put us right around that little gold hash mark you saw 2 months ago, down below zero. Now, don't get too worried about this one because this is something that always kind of oscillates above and below zero. Generally, it's slightly above, but we see many dips down below zero. Not that big a deal. Now, what is concerning to me is this kind of should reflect that back-to-school shopping that usually results in a little surge up in retail sales. So we'll see what the cutoff point here is for the retail sales numbers, but right now the expectations doesn't look very good. Now, this week, of course, the biggest piece of all is going to be the FOMC announcement by the United States. That's the most important one. But we do have three central banks saying something important this week. We'll start things off with the United States. That is going to happen Wednesday at 2 p.m. Eastern Time. Right now, the expectation is pretty much that we're going to see a 25 basis point cut from 5.5% down to 5.25%. Now, a lot of other global banks around the world or central banks around the world have already started to cut. So we're kind of chasing them, cutting to the downside. Now that is going to be important because right now the expectation is kind of wavering between 50 basis points and 25. The odds on favorite is 25 basis points. However, we will get more clarity on what the Fed is thinking at the press conference shortly after. So that same day, 30 minutes after that rate announcement comes out, is when the fireworks could really begin. This personally is my favorite moment. I like to watch this live as it happens because Jerome Powell will be giving a prepared statement, which, all right, it's always the standard boilerplate. We're looking at data. We're data dependent. Inflation looks to be under control. We're concerned about unemployment. Those are going to be his main talking points. Once that's done, though, the press will grill him on some topics that are off script. And he has been known to get a little waver a little bit and maybe say something that he shouldn't have, which creates a tremendous amount of volatility. So all I can say is Wednesday, right around 2 p.m. Eastern Time, be very careful. Volatility is going to spike significantly up and down. So there is no real clear direction as to which way we're going to go, just a ton of volatility. Now, are they the only central bank reporting? No, we've actually got two more to speak of. We will go across the pond now to look at the Bank of England, which right now is at 5%. This is kind of surprising for me. Thursday at 7 a.m. Eastern Time, they are expecting that the Bank of England is going to stay right where they are at 5%. Now, I find this one a little bit interesting because there is this thing called the MPC bank rate votes. There's 9 voting members on whether they should raise, lower, or keep the same. And every time they give this announcement of what their rate decision is going to be, these 9 members always give a little vote check mark as to what they believe. Are you going to raise? Should we keep it the same? Or should we lower? And at the previous announcement, when they kept rates the same, no members said to raise rates, 5 members said to lower the rates, and 4 members said to keep them the same. So I'm already seeing more people believing that they should lower rates, which leads me to believe that we could see a surprise here and drop to 4.75. I know the markets don't believe that. They say it's going to be 5%. I'm in the camp of they're going to drop 25 basis points to 4.75. We'll see if I am right, or we'll see if I am wrong. Now, our next announcement comes from the Bank of Japan, which is a tentative announcement. This one is tentative because there is no set time quite yet. Right now, the expectations are they're going to stay at 25 basis points or less. Remember, they have been negative for a very long time, and now that they've been raising their rates, it's actually causing a lot of problems. This is one of the main reasons we've seen that US dollar sell off so aggressively against the Japanese yen, and some feel the equity markets may have been hurt by this as well because it's the carry trade, where people are borrowing money in yen, converting that into dollars, and then buying US equities, getting a better yield, or even buying bonds. But now that that yield is going up in Japan and dropping in the United States, it's putting some of these people who have borrowed hundreds of millions of dollars underwater, and now all of a sudden they're forced to liquidate their positions. So this should put further pressure on the US dollar to the downside, yen to the upside. If they do surprisingly raise, which I don't think that they will, that would cause great kind of global economic concern. It means opportunity for you and I. But right now, the expectations are they're going to stay right where they're at just about 1/4% or less. So we'll see if that's any shock to the system on Thursday. So we have some big announcements from the U.S. on Wednesday with our FOMC statement, which should drop 25 basis points. Then you've got the Bank of England on Thursday and the Bank of Japan on Thursday. It's going to be a very exciting trading week, particularly from the central bank perspective. That, my friends, is your Monday morning must-knows. We'll see you next week.